everyone, I'm Terry McDonald and this is Don Fishback.
Hey everybody, how y'all doing?
You know, Donna, I noticed you're wearing red today.
I am wearing red, Terry, because today is Wear Red for the American Heart Association. And by the way, we've got an offer in case anybody hasn't taken advantage of it already. If you want, make a $14.99 donation at optionsforbeginners.com. You make a donation to the American Heart Association. You get a copy of this book for free and a special report that goes with it.
Yes, you do.
And then there's something else. The reason why we're here is I'm going to be speaking at the Options Masters Live event in Las Vegas with some really, and it's the date, it's in April 24th, 25th, 26th. And I'm speaking Friday night, the 24th, and then the Saturday morning early. And I'm going to be seeing some of my good, bestest friends in the options business.
Bestest friends.
I mean, these are people that I've known a long time.
They are.
One of the guys there is Tim Bigham, who was my broker way back in the 1980s. You know, here we are, 2020. So this is going back to the 1980s, and Tim was my broker. He's going to be there.
Wow.
Price Headley, neighbor,
Good
friend.
Lexington boy
Yeah,
as well.
yeah, absolutely. Price is going to be there, and Larry is going to be there. Larry McMillan, he's like the Yoda of options traders. He's taught all the Jedi Knights.
He wrote the dictionary on options
He
strategies.
did. When they say the Bible of the options business, that Larry wrote the book. Steve Nissen is going to be there,
Wow.
and I hope he brings Paul with him. So that would
so
be
too.
awesome. And let's see, have I forgotten anybody? Yeah. So those are the people that I'm really close to. But there's Chuck Hughes is going to be there. Rob Roy, Andy Hecht, who I've gotten to know a little bit lately. Bubba is going to be there.
Wow.
Yeah.
You know
And there's
Bubba.
going to so there's going to be a ton of people there. Really great presentation, and we'll have more on that in just a minute. But John Boyer, who's put the event together for TradeWinds, John wanted me to answer some questions.
Right.
And I think you have some questions for me.
I just happen to have some questions for you.
Okay.
So we're ready.
I'm ready.
Okay. So Don, what's the number one indicator you're paying attention to right now?
That's pretty easy because we've talked about it in the office quite a bit here lately.
We have.
Commodities, and then the next one is commodities, and then the one after that is commodities. So yeah, it is.
So
It's like the real estate location. Right now, it's commodities, and I'm looking at the price change in commodities.
So why is that actually?
Well, the reason is because I am concerned about extreme deflation. And what's going on in China is creating a crush in global demand. And the economy could be exposed to weakness that even the central banks can't. The Fed is easing, China's central bank is easing. So you've got this global easing of monetary conditions all across the planet in the biggest economies. And that usually works. But what happens is if you get this extreme deflation, and if you want something that's really easy for anybody to eyeball, if you go down the road, go driving down the road, and you see gasoline prices at $1.60, something has happened to cause the economy to just slow down. So that coronavirus is, you've seen oil prices come down from 60 down to 50.
Right.
You've seen copper prices go down. You've seen I just saw an article this morning in Chile that you're getting this huge pileup of commodities on the docks, and we're talking grains, we're talking cherries, we're talking cattle. So all of that demand is stopped, and that's putting pressure on the suppliers. And pretty soon something's
Something's going to give.
Something's going to give. Either China's going to start picking up that demand, or we're going to see further weakness, and that has me concerned. So commodities, that's why.
Yeah, makes a lot of sense. Okay.
I'm glad you said that because I
does.
I seem to think I make a lot of sense usually.
He really does.
Not all the time.
You're funny too. Where do you see the biggest opportunity for growth?
That's a good question. So I look at things a little bit differently than most people. I'm going to assume that we get growth, but then how do you take advantage of that growth unless you get the extreme deflation, and then that's a problem.
Right.
So what I look for is not where do I look for growth, it's what do I do to capture that growth, because that's what we want. We want to make money from the growth, not just real estate or copper or oil or social media companies, something like that. Mm-hmm. It's like, so what?
Right.
Because what I want is the money. Mm-hmm. And so the thing that I'm doing to capture growth is I'm buying calls. That's what I would be doing right now, because call prices are relatively inexpensive for the kind of moves that we've been getting. The market has been pricing in a move of, let's say, 4%, or a move of 2%, and we're getting moves of 4%. So if the option's priced to move 2 and you get 4, you double your money.
Excellent.
So I'm looking for inexpensive call options to take advantage of any growth that we do get. Mm-hmm. And the nice thing is you don't have to put, instead of spending, we were just talking to Brian yesterday where he bought a Microsoft call, and instead of spending $20,000 to buy Microsoft shares, he paid $18. Now think about the difference, $20,000 versus $18. Mm-hmm. And he got a big bang for his buck with that option play.
He's shaking his head yes right now.
Yeah,
yes,
exactly. And so the beautiful thing is you're not risking that much to buy the call. So you can, instead of saying, I'm going to spend $20,000 on stock, instead I'm going to spend $500 on calls, and I'm going to leave that $19,500 in cash that's safe.
Right.
But I still get the upside by buying the cheap call. So that's what I'm doing.
Perfect. Okay, number 3, what is the greatest threat to growth you see?
The greatest threat to growth, I think, is kind of why I was talking about that indicator, commodities, is deflation. If we get extreme deflation, you're going to see bond prices go up, bond yields go down. I'm concerned that the Fed will not lower rates as rapidly, and you could get the inverted yield curve, which has been proven to cause recessions.
Absolutely.
And in fact, we talk about that in our 3 pillars,
do.
Quite a bit. Yes, very much so. And so I would be really nervous about extreme deflation, because you get the extreme deflation, you can get that deflationary spiral that is really problematic, that even the Fed, no central bank has the power to offset that.
True. Okay, how will you trade the 2020 election? This is an interesting question.
Well, how will I trade the 2020 election? I'll tell you when it gets closer. I will not. That's a question that's almost impossible to answer. If my indicators are saying one thing, here's what I can say.
Sure.
If the option premiums are high enough, that is, if we get high implied volatility and we get high option premiums, then I'm going to be looking to do credit spreads on stock indexes. If, however, we have bad liquidity, which means that if you get a shock, if you have bad liquidity, the moves can get magnified. So if we have inexpensive option prices with poor liquidity, I'm going to be buying calls and puts, straddles, and then some directional stuff. So you tell me what the conditions are in September and October, and I'll tell you how I'm going to be. You'll know. I just told you what I'm going to be doing. You'll know how I'll be playing the market, the election.
Right. Good answer. Okay.
Thank you.
You're welcome. All right, the last question, I think, is, will the market be above or below its current level when you give your presentation at Options Masters Live? That's in the end of April.
Why would John ask a question like that?
Everyone, I don't know.
Okay, so here's the right now, all. So this is basically our 3 pillars strategy, which you've used successfully, right?
Oh, man. Love
Okay,
it.
I'm going to brag on
the
Terry for a little bit.
The best.
90% of all fund managers out there fail to beat the index. I don't know, that's a pretty well-known statistic. It's about 70% fail it over a 1 year, and about 80% fail to beat it over a 2 year, and it's about 90% fail to beat it over a 10-year period. Well, Terry, you've beat it over a 1 month, a 1 year, a 2 year, a 3 year, a 5 year, and a 10 year. Look at that grin, folks. Yeah. And so, and it's doing our 3 pillar
It's
strategy.
nothing but.
So we are,
Exactly what-
we've got the credit, we've got not credit card statements, we've got the fidelity statements to
do.
prove that.
We have proof.
Yeah. So
And I feel it too.
yeah,
It's
so
a good
we-
feeling, everyone.
this 3 pillars that we do is right now it's bullish, but there's 3 things. We're looking at yield curve, and I talked about that,
You did.
and the extreme deflation. So those are the 2 things that I'm really concerned about. And then market sentiment is the other part of the 3 pillars.
Right.
And all 3 of them are bullish. And if they stay bullish, then we're going to stay long, and hopefully the success we've had over the last decade continues. But if any one of them turns bearish, then my forecast will be for it to be lower. But that hasn't happened yet.
But what happens when that happens is we just get out.
When that happens, yes.
Yeah.
When that, if it turns,
Don't take the
if
dog
any
out.
one of those 3 turn negative, then we don't go short. We just exit and move into money markets.
Simple as can be. Yeah.
Okay.
All right. I think
Well,
you
thank
answered
you.
all the questions.
Okay. Well, thank you very much. And folks, I just want to say thanks for watching. If you have any questions, yeah, Terry.
Yeah, I was going to say, but if you'd like
No,
to.
go ahead.
If anyone has a question you'd like to ask Don, just go to the comment section or go to www.donfishback.com. Our contact info is at the bottom of the page. So thanks for tuning in.
Okay, and just like us and subscribe to our channel, and we're going to be doing this pretty regularly.
Yes.
Thanks for watching.